So welcome everyone to the year-end Small Business Accounting Tips webinar. And this is a webinar for small business owners and their CPAs. We are presenting this webinar today through the kindness of biz2credit.com at biz2credit.com, and thank them very much for presenting this. And we've assembled an expert panel today to answer questions across a wide variety of areas relating to your taxes, your accounting, and your financial situation. A few points before we begin. I just want to go over a couple of housekeeping items. First of all, we'll present the information to you in just a few moments. At the end of the webinar, the last 10 to 15 minutes of our hour-long session, we're going to allow for questions from the audience. And so we invite you to think of your questions, jot them down as we're going through the webinar and as you're listening to the information. We want to get your questions. We want to hear from you. You'll be able to submit your questions in two ways. First of all, if you look to your screen on the right, you'll be able to see a little chat box window there, and you can type in the chat box your questions, and you hit the send button, and your questions will come in, and they'll go to the organizers and presenters. We'll be able to see your questions, and we'll be able to address them at the end. Another alternative way that you can use to submit questions is if you want to go to Twitter. You can use the hashtag CPA Tax Webinar and submit your questions on Twitter, and we'll be monitoring Twitter and we'll get the questions there. After today's session, we're recording the session, so we'll be archiving it, and you'll be able to watch the archived webinar if you've registered for this session, and you'll be sent the link to the archived webinar at the end. So with that, I'd like to kick off and get started, and I'd like to first do a round of introductions with our panelists. My name is Anita Campbell, and I'm the founder of Small Business Trends, and I'm the moderator today. So I'll just keep things moving along. I run a site called Small Business Trends, where we provide information for small businesses. Our entire focus is small business owners and entrepreneurs and the information you need to run and grow your business. With that, Alan Goodman, CPA, would you introduce yourself, please?
Thank you, Anita. I'd love to introduce myself. My name is Alan Goodman. I'm a CPA. I've been a practicing CPA for close to 25 years. And our firm, I'm the managing member and owner of the firm, Alan Goodman CPA PC. And our firm specifically focuses for clientele on the smaller business scale. The typical LLC with anywhere between 2 to 30, 40 members, small corporations as such, the small businessman or woman. And that's what our firm focuses on. And I'd like to talk a little bit about what's new and what's going to expire in the 2013-2014 tax years coming up ahead. And I look forward to chatting with everybody.
Very good. Rohit Arora, the CEO of Biz2Credit, our host. Please introduce yourself.
Hi, my name is Rohit Arora, and as Anita said, I'm the CEO of Biz2Credit. We are here to help small businesses get access to credit, and we do it by helping them to apply online. It's totally free of cost, giving them free loan consultations, and then helping them to get loans and other credit products from banks and other lenders. And in the last 5 years, we have facilitated over $1 billion in funding, and we are proud to have worked in all 50 states, and we continue looking forward to help more businesses in the new year.
Oh, thank you. And John Meyer of the Company Corporation.
Thanks, Anita. My name's John Meyer. I'm with the company Incorporation. We're the team behind incorporate.com, and what we do is we work with small business owners, entrepreneurs, and real estate investors to help them start, manage, and then grow their businesses. So I look forward to discussing business entity structures with you here today, and I'll look forward to hearing from Alan and Rohit about the other key points that we'll be covering in today's session. So back to you, Anita.
All right. Well, I'm going to just jump right in, and let's get in with Alan Goodman, and let's hear all the good stuff about taxes and accounting.
Thank you, Anita. Appreciate it. I guess are you going to be moving along the slide? Perfect. Okay, here we go. In 1912, the actual IRS tax form that was completed by individuals was one page. As everybody knows today, that the tax code has gotten extremely complicated and complex, and a typical tax return for a small business owner could be anywhere between 5 to a couple hundred pages. So it's very important that people take advantage of the tax code and utilize it to their advantage. You don't get a pat on the back for paying extra taxes. Everything that's in the code is there to encourage small business owners to invest back into their business, and the tax code has a lot of social impact, where they're trying to push small businesses and small business owners to invest in capital, invest in equipment, and those are some of the things that you're going to see that are going to be a tremendous advantage. If a small business owner takes advantage of that, they would be able to get some tremendous deductions that keep their tax bill on the lower side. Specifically, as you can see on the slide, there are two specific types of deductions that are very juicy for small business owners. And as you can see, you have a Section 179 deduction. That's an actual IRC, the Internal Revenue Code Section 179. It's in black and white. It constantly gets adjusted based on the politics of the day. But there is something called a Section 179 deduction where businesses can deduct up to $500,000 of qualified property purchases that were made in 2013. Now, 2013 is almost over, and we don't know what's going to happen in 2014. This specific deduction will expire. Chances are it's going to be much less than $500,000. I know the slide says it will probably decrease to $25,000, but usually Congress and the President will come to some kind of compromise if they could ever get a compromise. And you'll see somewhat of a Section 179 deduction where small businesses can purchase equipment as such, but I don't think it's going to be anywhere near the $500,000 mark, which it is now, which is a phenomenal deduction to have. What that means, in essence, if you are showing a $600,000 profit in your business and you go out and you know you've got to buy equipment for your business of $500,000 and you're just pushing it off into the year to do it before 2013 is completed, you're going to get the deduction. If you do it next year, you're going to have to depreciate that equipment over an extended period of time. You will not get the full deduction. Therefore, your income, you'll be paying taxes today's dollar as opposed to over time. There's another item on the bottom, bonus depreciation. That is definitely probably going to expire. And I don't think it's that eligible for the listeners here, since I would be surprised if most of the listeners here would even reach the 500,000 mark in terms of equipment purchases and as such property purchases. But there is an additional 50% first-year bonus depreciation on any new assets. Section 179 can be on old or new assets, and bonus must be only on new assets. Again, that's an item that's going to expire. A nice, juicy deduction for a small business owner. In terms of kind of shifting gears, now going a little bit personal, a little bit business. One of the most famous deductions on a personal return or a corporate return is your pension contribution. That's a deduction for a business. It is also a deduction on your personal return. There are many different types of plans. The SEP IRA, the regular IRA, the simple IRA, the individual 401k, and other types of qualified plans. They are tax deductible and growth tax deferred. Deferred meaning that you will be paying taxes when you pull out the money at a later date when you retire. But as of now, you will not pay any taxes for any of the growth. So if you have a stock portfolio in your IRA that currently is, let's say, at a baseline of $100,000, and pick some winner stocks, and at the end of next year, it grew to $200,000, and you're a superstar. That $100,000 gain will not be a capital gain under your IRA umbrella. It's a deferred gain when you retire. Some numbers on that, before you move this slide, Anita, some numbers on that, just so people know. The regular IRA deduction for 2013 was $5,500 if you're under 50 years old, and $6,500 if you're older than 50 years old. And the 401k for the same age bracket is respectively is $17,500 if you're under 50 years old. You could put away $17,500 in your 401k, and you can go ahead and put away $23,000 if you're over 50 in your 401k, which is wonderful. That means you do not pay any federal income tax or state income tax on the money you're deferring. Still subject to FICA and Social Security, unfortunately, but you would be able to save on the federal tax. You can't touch the money; it will be put away. So if you're somebody that's anyways putting away money and you're a favored type, you might as well go ahead and put it into an IRA or something like that. It's some kind of investment tool. Again, with a lot of things that are going to be mentioned in this seminar, you must consult your tax advisor. Every situation is different. Everybody has their own stripes and shapes that have to be taken into account. This is just for informational purposes and kind of a broad stroke. Okay. Now we're looking at tax deductions expiring after 2013. Basically, there is a tax break, if you will, or something that's available to small business owners, something called the qualified small business deduction. What that means is that if you go ahead and sell stock of a qualified small business, you can exclude 100% of the gains from being included in your income. Unfortunately, this 100% exclusion expires at the end of this year in 2013. It will be only 50% exclusion after that point. To be considered a small business, a small C corporation, to be considered a small business, you have to be a C corporation, small C corporation, and the stock has to have been held for 5 years. Okay. Let's move on to the next slide, Anita. You have the mass transit fringe benefits that's being reduced in 2013. The tax-free exclusion for mass transit fringe benefit was set at $245. That's going to be reduced to $130 in 2014. That's quite a drop in terms of that type of nice fringe benefit that's allowed in terms of reducing your taxable income. And we go on to the next slide. And now we talk a little bit about tax deduction expiring after 2013. You know, there are a bunch of deductions. I just jotted down some notes over here. Some of them are a little bit outside the scope of our conversation here. But let me just throw a few of them out to you. Some of those deductions that are going to end. Specifically, you have something called a teacher's deduction on certain expenses. Currently, teachers can deduct above the line $250 of unreimbursed expenses. That's going to be expiring. You have some state and local tax issues, which I'm not going to get into outside the scope here. You have the exclusion of discharge of principal residence indebtedness. Typically, forgiveness of debt is considered taxable income in the eyes of the IRS. However, this tax provision, which expires at the end of this year, allows homeowners who have been foreclosed or subject to a short sale to exclude up to $2 million of canceled debt. That, unfortunately, is going to expire. That's something that if you're in that situation between now and the end of the year, you should reach out to a tax professional and take advantage of this. This is, this is something that that could cost the taxpayer a lot of money if they have to go ahead and pick up the forgiveness of debt as income. Remember, if you default on a loan, it doesn't just go away. The IRS considers that income if you went ahead and earned that money. So therefore, that's subject to tax. However, in 2013 and the years before, during the housing crisis, the IRS was instructed by Congress to give the taxpayers a break and not to be hit twice, once with the foreclosure market and then again with the taxable income. So they instituted the foreclosure loophole in the tax law, and but that's coming to an end. Then there are some items regarding distributions of IRAs for charitable contributions, etc. We're not going to get into that. The energy efficient appliance breaks. You hear a lot about those tax credits for energy efficient appliances, windows, etc. You should take a look at that. Some of those are expiring at the end of 2013 or getting reduced, as well as the electric vehicle incentives that were put into place. I don't know if there's another slide. It's Anita.
No, I think that's the end of the slide.
That's it. I hope I didn't talk too fast, but we are from New York, so we talk fast there.
Well, thank you so much, Alan Goodman, for now. As I indicated at the beginning of the session, we are taking questions at the end, so if you've got questions for Alan, please type them in the chat window that you'll see off to the right. You should see some little controls on your screen off to the right. Or if you enjoy Twitter and you're on Twitter, you can tweet your question using the hashtag CPA Tax Webinar, and we'll have somebody monitoring and we'll check the questions there. And before I bring on John Meyer to do his session, I do want to remind everyone that the information today being presented by our experts is for educational and background purposes only. You should always check with your own advisors, tax and legal advisors, for advice specific to your situation, but certainly we're here to share information and education today. And with that, let me bring on John Meyer.
Thanks, Anita. I appreciate it. As I mentioned before, I work with the company corporation where we help business owners, real estate investors, and entrepreneurs go ahead and incorporate their business. So I want to talk a little bit about choosing the right format today. And many of the people that may be on the session, you may already have a business entity. If this is something that is on your list of things to do for 2014, hopefully some of this information is helpful for you. But as you look at starting a business or managing your business, you have a couple different opportunities when you want to set up your structure. And probably the easiest way for somebody that has a business idea and that they want to test out that business is just really operating as a sole proprietor. And what that means is that you're going out and just simply getting a business license and testing your business idea. So it's probably the easiest way to form and operate a business because it's pretty much potentially just one filing of your business license at your local jurisdiction, maybe your city or your county or maybe even your state. Like I'm talking to you from the state of Delaware, and we actually have a state business license because we're a smaller state. So that would be probably the easiest way to get your business up and running and test it. Now, there are some drawbacks to being a sole proprietor, meaning that the owner would be personally liable for any lawsuits filed against the business. So think about this way, that if you do maybe have a corporate job and you've built up a 401k and you've got a nice house and a car and a sizable bank account, basically all of those personal assets would be exposed to your business activities. So if you have a lawsuit that's brought against the business, all of those personal assets are basically exposed to your business activities. We're going to talk about one way that you might be able to shield those or protect them in just a minute, but a couple other items here. There's no state filing required to form a sole proprietor, so again, it's really just your business license. So there wouldn't be a state filing unless you're in a state like Delaware or maybe Rhode Island or a smaller state where you actually have a state business license that you have to file. And then owners actually report business profit or losses on your personal tax return. So you don't need to file an actual tax return on the business if you're a sole proprietor. You just simply pull it back onto your personal taxes. And certainly Alan's a expert there that if you have specific questions, feel free to put those into the chat box, or as Anita said, go ahead and tweet those with that hashtag, and we'll be happy to address any questions during today's session. Now, I mentioned that being a sole proprietor, you are leaving some of those assets potentially exposed. Now, there is a way that you can go ahead and separate those business assets and the personal assets, and that's forming a business entity, which are what might be known as a limited liability company, an LLC, or a corporation, maybe a C corporation or an S corporation. But what you have is you're basically filing paperwork that's done at the state, and you're setting up a independent legal structure that's separate from the owner. And what this does, as I mentioned, it puts a brick wall between your personal and your business assets. And there are some certain tax advantages for that, and certainly Alan would be happy to discuss those. But the questions most business owners are going to ask is, why would you incorporate? Why would you form an LLC? And there's several different reasons. Some of the key benefits would be personal asset protection. So you're putting that brick wall between personal and business assets. You may gain additional credibility or name protection. So think about getting an Inc. or an LLC after your business name. It could help you get legitimacy if you're trying to land a big contract with a larger company. They might look to see how formal your business structure is. And then you have perpetual existence or ease of ownership. So if you have an exit strategy, or if you're thinking about creating this business and then selling it down the road, having a business entity can make it easier to actually sell that asset down the road. So those are some of the key benefits there for forming an entity. You also have some key tax pieces that when people look to form a business entity, they're keenly aware of a couple opportunities. One would be tax flexibility, and then also deductible expenses, where you might be able to deduct normal business expenses such as salaries and then other business expenses from within your entity, and Alan can certainly speak to some of that. But from a tax flexibility, you know, an LLC is taxed at the same rate as a sole proprietor, but does provide you with limited exposure to personal liability. So you do have a little bit of ease of management with the LLC from a tax standpoint, but it does create that personal asset protection that I mentioned before. Happy to answer any questions as we go through the rest of today's session, but I'll go ahead and turn it back over to Anita and Rohit to cover some other key points here today.
All right. Well, with that, I'm going to bring back Rohit Arora, our host today from Biz2Credit.
Yeah, this is Rohit. So Anita, thanks. So what we have been seeing here is that, you know, we not only work with a lot of small business owners, we also work with a lot of CPAs and accounting firms, because every financing need triggers the need for more financial documents. And we have also helped a large number of small to mid-sized accounting firms also to get access to credit to expand their practices, as well as we have a white label platform for our accounting partners who can actually, you know, offer access to credit to their customer base, you know, sitting in from their own dashboards. They can, you know, sync in their QuickBooks Premier offering into their into Biz2Credit dashboard. The applications get filled online, and they can see all the options. We also have a partnership with Paychex. So, like, if any of the accountants are using Paychex payroll services, they can also, you know, get access to credit through their Paychex accounts also. And one of the things that we have seen is that, you know, while for CPAs, you know, their bread and butter services, and I think Alan can vouch for it, you know, more and more personal tax returns at least are getting started to get filed online itself. So they are facing that heat. At the same point of time, a large number of business owners are looking for their CPAs to actually provide them with more value-added services. So they are not just looking at their CPA just to file their taxes. They are looking them as their consultants, as their growth partners, and majority of the accountants and CPAs have a dream to also become a consultant and an advisor to their clients and not just a tax preparation service. So this solves those problems. And then obviously, one of the big issues for small business owners in the last 5 years has been access to credit, very high decline rate. Going to your traditional banks is not a value proposition and not an option anymore that will ensure that you will get access to credit. And if you combine a CPA who can provide you with a trusted financial advice along with access to credit, then it becomes a win-win situation. So that's what Biz2Credit is doing directly with small business owners as well as through our CPA and accountant partners. And so what does our program really mean? So our program really means is that we are helping accountants to become digital without having to invest in any digital platform. That means that accountants can go in and not only can they help their customers to get access to credit, but they can also upload all their documents. They can retrieve those documents in one place. They have the ability to go to the IRS with the customer permission through e-signatures and pull all their IRS transcripts going back last 4 years. And then, it also creates a dashboard with the scorecards for every single customer, which clearly means that the accountants can go in and can guide their customer on an ongoing basis. And this is good for accountants also because this makes them more sticky. This makes their services more valuable for their customers. And what we have seen over and over again and again is that when an accountant helps a customer to get access to credit, it clearly means that the customer's businesses is growing. That means more work for accountants, not just tax preparation work. And that also means that the accountant can now, also grow their business along with their customer's business, which is a win-win situation. And that actually we have seen becomes a very good way of doing it. The other thing that we have found is that most of the accountants and CPAs are still not very digital savvy today. They haven't invested a lot of money in digital platforms, so this is a great way for them to go digital without having to invest any upfront money, and also become more efficient because otherwise small CPA firms, their biggest challenge is manpower cost and how many clients can they handle. So this way, you as a CPA or a CPA firm, you can make a lot more money from every single client without their complaining. Alan can vouch how much people try to bargain or complain when you're just a tax preparation service, because that's a commoditized business. So I think that's what we are trying to do here. And for businesses also it's great. Instead of going to any third-party guy or a loan broker, they're working through their CPAs who are more trustworthy. And also, CPAs work through Biz2Credit. And what we do is that we make our money by charging a transaction fee to the lenders and other intermediaries who are involved, because we don't sell the leads, we don't sell any data to any of our lending partners. And what that means is that the accountants also get a rev share from us. So this is even better, that you don't need to charge your customer while you can still keep making money while helping your customers grow. And that is a win-win situation. So we have like hundreds of accountants who are using our white label platform, and they've been able to help their own businesses as well as their customer businesses. And and it's also easy because they can keep applying, they can keep upgrading their customer base, they can keep offering them new products. And anytime they need any help, we have free loan consultation available, both for small business owners as well as for accountants or for accountants' customers. And that way they don't have to invest a lot of resources in-house to actually offer these kind of value-added products and services. So I think what we do fundamentally different. We as a company started 5.5 years back. We have funded over $1 billion. We have 1,100 plus, 1,200 plus lenders on our platform. And where we have become very good at is that we solve a basic fundamental problem in the marketplace, is that people looking for money, which are typically small business owners, have a very tough time in trying to figure it out on their own. They don't have time. They don't have in-house CFOs. Their CPAs are very busy people themselves because their CPA firms are also small businesses in a sense. And and it gets really troublesome. You never know whether you're getting the best product, best pricing, best rate, best terms, best offering out there, best service. And today, what we see with banks, with big banks, if you are applying for a loan, only I would say 1 out of say 7 or 8 applicants will stand any chance of getting a loan, which is a very low number. So unfortunately, a lot of business owners are then forced to borrow money at very high cost. So that's where we come in the middle. We say that no, there is an option, and you can work through our platform. We have micro lenders. We have leading banks in the country. We provide a lot of SBA loans. We do alternative lending, which is much, much lower price than what the business owners will get on their own. And for banks and other lenders, we bring in a lot of efficiency. We lower their risk. We help them to retain customers. We help them to, manage their declines. So that means that if they're not able to fund a customer, they don't need to just say no to the customer. Now they can help them with some other lending institution. And that's all that means. Because we're lowering the cost, we are squeezing out the inefficiencies in the system is beneficial back to the customer. So every single product on our platform is actually priced much more attractively, much cheaper than a customer will go and get on their own with any bank or with any lending institution. And that's what we are really proud of, because we don't charge a customer, and at the same point of time, we are also helping them to get a product which is cheaper than what they can get on their own. So I think that's very effective. We make it simple, we make it online, we give everybody document management system. We have a partnership with CSC where you can order all your business licenses, you can order your certificate of incorporation, you can check your compliance. We have the ability to pull your IRS transcripts with your permission to give you all kind of reports, third-party reports from credit bureaus, which will lower your risk, and do a scorecard model. And all that is extremely, extremely helpful, because that clearly means that you are a more informed customer. And as a CPA or as an accountant, that clearly means that now you are helping your customers more and more by making them more credit worthy and credit educated. And that also means that it's better business and more business for an accountant. Next slide. So, how long the process takes. This is very important, because business owners, again, are very busy people. Same with accountants, especially they get very busy starting in January, middle of January till April. So what we have done is that we have created one single application. And what our promise is to everyone is that we will go and hunt for the best products for you. So you don't have to worry about it. You just have to come and fill out one single application. It takes like 5 to 7 minutes. And you see all your options, since no data is sold to anyone. So you're working in a secured environment. You will not get any call from anyone, any third party, till you are totally authorizing for that information to go to a lender. You have the ability as an accountant or as a small business owner to get a free loan consultation. You can see a checklist of all your documents. You can upload those documents. You can e-sign all your applications. And all this is free. So you're not paying us anything. We are not asking you to take your credit card out and start paying us on things. You can store hundreds or thousands of documents on your doc vaults in our system. Again, free. You can access the same application through your smartphone. You can do it through your tablets. It's a fully mobile site. So that means that you can do everything that you can do from your laptops through your mobile devices. You can get all your alerts back. And the other thing is that any third-party product that we offer, including CSC products and other products, they're priced much, much more attractively than what you will get if you go directly to these companies. And the reason, again, is because of our distribution strength, because of the fact that we are able to close more deals. And with volume, we are giving a lot of savings back to our customer base. And then combine it with free loan consultation. And once you finish an application, you don't have to come and fill another application. It's our guarantee that we will find you a solution. We might not be able to get you the best credit product at that instant, but we keep working for you. We keep re-engaging. We keep adding new products. We keep coming back to you. There is a scorecard for small business owners. There is a scorecard which a CP or accountant can see in their dashboard for every small business owner. They can get alerts. They can monitor when a new credit product is coming up or when the customers cross a certain threshold, which is important because as we end the year 2013 and as business owners or as accountants, you start filing more tax returns for your customers. Every tax return that gets filed makes you, as a business owner, more eligible for a better price loan. So that is something very important because you have crossed one more year in your business. So just by being in existence in business for one more year adds tremendously to your creditworthiness. And that is something is very important, because just having that in place and filing your tax returns on time and, showing profit. A lot of our business owners have this issue where they want to suppress their profits and don't show profit, and that hurts them when they are looking for access to credit. So that's what we advise. We request our accountant partners, and we also tell our business owners that if you are making profit, show profits. That's always helpful, not just from an aspect of growth, but also to get better price credit products, which eventually will help you to grow your business. So Anita, we can go on the next slide. Yeah. So I think, so Alan, I think you can take over, because from here and really talk about the recap about, what the tax code and tax filing really means.
Sure. Thank you, Rohit. Very, very well informative presentation on your part. Let me just add, in terms of bank loans, you are 100% right. Today, banks will not look at a small business if they weren't in existence for at least 2 years or even 3, depending on the bank. They would not want to lend them money. They consider it a startup and too big of a risk. So you are 100% correct. By just being in the game, you're becoming more bankable, as they say. Just in terms of some recap here, tax codes are even more complicated, and they're going to get even more complicated in 2013's taxes, your personal taxes. You'll see a lot more lines there. Some of it has to do with the new Affordable Care Act, known as Obamacare. There are certain line items on tax returns, certain disclosure requirements regarding taxpayers' insurance, whether they're covered or not, or whether the penalties will be assessed on the return, et cetera. That's something that's going to come into play, and as the years go on, the tax returns are going to become even more complex in that sense. CPAs, one of the biggest misconceptions, this is more for the small business owners that are listening, one of the biggest misconceptions that's out there is that CPAs sit all day behind a desk and prepare tax returns. That's actually a very, very small part of a CPA's practice. Predominantly, most of the time that's spent is in the business consulting realm, is in tax planning, is in helping clients prepare the documents, financial statements, tax returns, to get it to a business credit so they can become bankable. Putting numbers on a tax return page is really, at the end of the day, is really the end game to a lot of prep work that the CPA spend a lot of time on. And Rohit is correct. One of the things that makes an accountant special to a client is if he's able to get them a loan, help them get them a loan, bring them to the right people to get them a loan, to help them obtain a loan, that's a relationship that's going to be solidified. In terms of taking advantage of existing codes, I think we touched a little bit about that. And again, this is a broad stroke type of webinar, and everybody's situation is different. Everybody listening, maybe listening from different parts of the country. Where, just to give you an example, in the rural area in the United States, there's certain farm tax rules that come into play and codes that would not come into play, let's say, in a metropolitan area, let's say Boston, Massachusetts. So, the tax code, even though it's a federal code, there are a lot of items in the tax code that are geared specifically to regional tax concerns, a regional tax policy. And having said that, I'll hand over the microphone to John and let him talk a little bit about recapping the issues about why incorporating, et cetera.
Thanks, Alan. I appreciate it. I think the key points here really are just as we're winding down on the end of the year. If incorporating was something that you had on your list of things to do for 2013, certainly you have a couple days left here in the year to go ahead and accomplish that task. If not, as you're meeting with your tax specialist or your CPA at the first quarter to take a look back at your taxes, certainly start thinking about how you want to better protect your personal assets and set up those business entity structures going into the new year. So you do have some certain tax advantages that you can gain from setting up those business entities, and certainly a lot of other additional benefits that you can get through forming a corporation or setting up an LLC for your business. So with that, I think I'll probably turn it back over to Anita and see if there's any opportunities for questions.
Yes, at this point, thank you very much, John and Alan. Very, very informative. And of course, Rohit, would you like to recap? I do have a number of questions that have come in, but why don't you recap before we get to those?
Yeah. So I think as we end 2013, this year again has been a pretty tough year in terms of access to credit. As things stand here for 2014, looks like it will be a little bit of a better year than what we see in 2013. But we still don't know with all the things which keep happening in Washington, with budget and all that stuff. But again, going back to the same point, I think as a small business owner, if you're looking for access to credit anytime in the rest of 2013, which few days left, or 2014, then, be prepared to file your taxes on time, be prepared to work with your CPA. Don't go to your CPA accountant at the last minute and, file your taxes, because it's not just a formality to just fill your tax return and file it, because these have long-term implications. So work with them, plan your stuff, plan your growth strategy with your accountants. And then the other thing is that, what we keep telling our SMB clients, small businesses, accountants, is that if you need any help, you can register on Biz2Credit, get a free loan consultation. We can guide you what to do, how to do it, not from a taxation purpose, but at least from a loan, preparation perspective. If you want to bring in your accountant with you and want to have a chat with one of our loan specialists, or just call them up, it's all free. So do that, because if you really want access to credit, then like anything else, you have to plan it out well. You have to work with your accountants. You have to close your books on time, and you need to be really buttoned up. That's the best way and the only way to get access to cheap credit. Otherwise, you will be forced to borrow money at very high cost, and that might not be even sufficient for you to keep thriving in your business.
All right, thank you. Good. All right, I've got a number of questions. Actually, some people emailed me questions. And so the first question here is actually for Rohit. It has to do with the government shutdown, the federal government shutdown in October. What impact did that have on small businesses? Why? And are we out of the woods yet? Or are we still recovering from that?
So Biz2Credit brings out a small business lending index, which is a monthly index, and the impact of government shutdown on small businesses, especially access to credit and overall sentiment, was pretty bad. Because not only the Small Business Administration, which is the federal guaranteeing agency for small business loans, was shut down, but even the IRS was shut down. And a large number of loans which were being disbursed by banks, both SBA and non-SBA, was not happening for at least 3 weeks, and the backlog is still there. The other aspect is that this year the retail sales have been much less than last year, because we have just recently looked at those numbers, and we have talked to hundreds of our retail clients, so that's not a good news. So overall, I would say the government shutdown, both from a sentiment aspect as well as from an access to credit aspect, has been bad, and we are still recovering. And my worry is that it might recur again in January, end of January or early February, and that will not be good for the economy overall as well as for small business owners.
All right. Now, this is a question for Alan, and I know this is a big question. It's big enough to drive a truck through, but Alan, do the best you can to summarize it. And that is, from a tax standpoint, is it better to do an LLC or a corporation?
That's a good question. That's probably one of the most famous first question. Actually, second questions when a client comes into my office. First question is, where's the bathroom? Second question is, should I be an LLC or corporation? It really, and I apologize in advance, but I have no choice. The answer is it depends. There are reasons to become to form as a corporation, and there are reasons, and very good reasons, to form as an LLC. Traditionally speaking today, and this is very broad, today, most new entities are formed as an LLC. Now keep in mind, to be you want to be formed as an LLC if you have a partner with you or you have a bunch of partners. If you're a single member LLC, you're going to end up filing the LLC return as part of your personal return, almost like a sole proprietorship, and you will have the protection, as the panelist had mentioned earlier, the liability protection, but a single member LLC filed almost as a sole proprietorship and on a Schedule C. If you are somebody that has a partner and you're forming a new entity, traditionally speaking, today the LLC is the way to go. It gives you protection and it has a lot of good bells and whistles. Corporations, there are reasons not to be a corporation, not to form as a corporation. Obviously, the most famous reason is the double taxation that's involved. In other words, what that means is if the corporation earned profit, it would pay tax, and then if you pull out the profit and put it into your pocket as a distribution of profit, in a corporation, you'd be taxed again as a double taxation. You'd be taxed twice, once for the corporation earning the profit, and once for you to when you are actually extracting that money out of the corporation as a dividend, you'd be being taxed a second time. As opposed to an LLC, you're only paying tax on the one time when the LLC earned the profit, not when you pull it out. Distributions are not taxable. That's a misconception. The earnings of the LLC is taxable according to your proportional ownership percentage, but the distribution is not taxable. But there are circumstances, and I'm not going to get into the weeds, there are circumstances where you really, in a particular instance, should form as a corporation. Again, that's something you should discuss with your tax advisor. But most new entities that come on board today are LLCs in its formation. And the reason is it's a very popular form that has a lot of good tax tools for the taxpayer.
Thank you so much, Alan. Now here's a question for John. And this question has to do with having an inactive company or corporation out there. I have an old corporation. It's no longer being used. Do I have to shut it down? Could you speak to that, John?
Well, it's a good question, Anita. You have the opportunity to shut that down. If you want to do, I guess, some good housekeeping, you can certainly go ahead and dissolve that entity, and service companies like ourselves at the company corporation can help you dissolve that. Alan can probably help you also dissolve that. You do have the opportunity to also let that entity stay in a void status at the state. If that's something that you choose to do, you may be subjected to any type of back annual franchise taxes with the state. So if you ever wanted to use that entity again, there might be fees that you might need to incur to go ahead and bring that entity up to good standing, but you can always go ahead and dissolve an entity to close it out.
Very good. Now here's a question, another one for Alan on retirement accounts. Alan,
yes.
If I want to set up a retirement account, 401k, IRA, and still contribute for the 2013 tax year, how long do I have to do that? What's the last day I can do that?
Well, your 401k would be your last payroll check for December 23rd, for the year end of 2013, traditionally in December, of course. Whenever that last check gets issued from your payroll company, you want to make sure that you've got the 401k set up and they're able to go ahead and defer your salary and all that. You're going to want to speak to a pension person on that. In terms of IRA, you have until April 15th to go to the bank or a investment bank and open up an IRA, named an IRA. The bank statement has to say it's an IRA, and you can go ahead and deposit the money even as late as April 15th itself, and put the money into a money market that day. You could then move it around into different investment vehicles if you'd like, but it has to be done by April 15th. The SEP can be SEP, which is more for small business people. It's a more sophisticated retirement tool that actually has to be funded, and before you actually file your tax return, which can be on extension and can be funded by the latest date of your extension filing deadline.
Thank you. Here's another question for Rohit. What types of lenders does Biz2Credit represent?
So Biz2Credit has lenders like micro lenders like Axion USA, Valley Economic Development Corporation. There was another question somebody asked, are there micro lenders for the tech season? Yes, we have micro lenders for every season, not just for the tech season. So we have micro lenders, we have traditional banks, like the big retail banks across the country. We have a large number of small business administration lenders that can give you money in the SB Express, the Small Loan Advantage program, as well as the 7A, which means that you can get lines of credit up to $350,000 at 6% a year, and loans between $350,000 and up to $5 million up to 25 years, again at 6%. We also have alternative lenders who can lend you money very quickly against your credit card receivables, against your bank deposits, as well as asset-backed lenders who will lend you money against your account receivables. And we also have lenders who can lend you money for buying your equipment, your inventory, and or to refinance your existing equipment loan. So we have all various kind of lenders. So just to cap it up, we have lenders which will lend you money in an unsecured fashion. So that means that they're not taking any lien on any of your assets. They're just putting in a UCC lien on your business. We have other lenders who will lend it against some of your business assets like real estate or equipment or inventory. And then we also have lenders who can also lend you against your personal assets if you need some quick money as a bridge financing, like against your gold or automobiles or some of the other fine assets like wine and all that.
And we did have a question come in from Twitter about microloans. You alluded to that earlier, Rohit. Could you explain what is a microloan, and is there any particular advantage or disadvantage to a microloan?
So the good news is microloans in US are pretty recent phenomenon, and they have been more well accepted globally. So microloans in US means that any loans between $5,000 to $75,000. Traditionally, this money comes from lenders who are community development financial institutions. They get their money from US Treasury as well as from banks. And this money is allocated for businesses which are either less than 2 years old, which traditionally banks will not fund, or where they have a poor credit. That means credit scores below 650, or in cases where they are immigrant businesses with not a very strong credit history, or they are not permanent residents in the country. So a lot of these micro lenders are either focused regionally. Some of them, like Axion USA, is a national lender and the biggest micro lender in the country, while some of the other lenders are focused locally, like in New York, in California, in Boston. So every big metropolitan area in this country has some micro lenders. And so if you're looking for some a small amount of money, and the interest rates there are between 9 to 15% a year. So much better than going to a cash advance player. And these are like your normal loans, anywhere between 1 to 5 years. And they are there to, and micro lenders have a big social mission. So that means that they're trying to help businesses which traditionally get turned down by banks and other traditional lenders, and then they are trying to fill that gap in the middle.
Very good. Very good. All right, we have a question now also for John again, I believe. And this question is, what is the real difference between an S Corp and a C Corp? Do I have to file for an S Corp at my state level?
Good question, Anita. When you do set up a corporation, you're going to file as a corporation or as a LLC. You file as a C corporation, and that's done at the state level. And then your choice to elect Subchapter S, which is a special treatment with the IRS to be taxed a little differently than a C corporation, would be a form. It's called the Form 2553 that you actually go ahead and complete after you form a C corporation, and you fill out that form, and then you're able to get taxed as a S corporation. And the big difference there is that a C corporation, you're paying taxes on the business, and then also personally. As an S corporation, you're actually pulling through any profit or loss onto your own personal tax return. So there's some high-level information on it. Certainly, if you're thinking about it, consult your tax specialist.
And a quick follow-up on that for Alan. So Alan, that form that John just mentioned to elect for an S Corp, I assume that's something that your CPA can help you with?
Yes, your CPA can help you with that. Like John had mentioned, it's the 2553 form, 2553 for the federal, and each state has its own form. I know for New York, it's a CT6. I believe it's CT6 for New York, which is to elect as a subchapter S election. So you would have to file the 2553 for federal, and then each state you'd have to take a look and see the state that you're in, whether you have to file a specific form for that specific state that you're transacting, that you're housed in, that you're doing business in. Keep in mind, people sometimes make a mistake and think that the federal will be good enough to apply to their state level. That's not actually accurate. You need to file a federal form as well as a state form to be eligible for the S corporation status, so Chapter S status.
All right, very good. Okay, thank you. We've got one final question here real quick. I'm going to throw this one to Rohit, and that is, what do people do if they are short on cash to pay their tax bill on April 15th?
So if you're short on paying your tax bill on April 15th, you can do three things. One, you can look around to borrow money from a micro lender or from an alternative lenders, because banks will not finance you for that need. The second thing is, if you're short on paying your taxes, contact your CPA or contact IRS, because you should get on some kind of a payment plan. The last thing you want is a tax lien or something like that coming up, because that's going to impact your business credit and personal credit, and that will not help you to get any access to credit. And then the third thing is, don't wait till April 15th to figure out that you're short on paying your tax payments, because you should be knowing that from between January 1st to April 15th that you will be short on that. So plan ahead, and you can come on Biz2Credit, you can apply, and we can get you access to credit for that purpose, but plan ahead. We find a lot of small business owners wake up at the last minute with these issues, and then they have to pay a lot of penalties and fines, and also it impacts their business and personal credit, which again is not good for them.
All right. Well, thank you all. I want to thank everyone for joining in today. We're at the end of our time, but a few quick things before we close out. First of all, thanks to our panelists for sharing their information. I'm going to head back up to this slide so you can see each of them. Alan Goodman, CPA, Rohit Arora, CEO of Biz2Credit, John Meyer, Director of Education for the company corporation. Very wonderful information. Appreciate it all. You will receive a link to the archived version of this webinar. And final point is that if you have questions, you can send those questions to info@biz2credit.com. That's info, I-N-F-O, at biz2credit.com, and that includes any questions for the panelists. Those will be forwarded on to the panelists. Well, thank you all very, very much for participating today.
Thank you. Enjoyed it.
Yeah, thanks, Anita, for moderating this webinar.
Thank you.